Good morning, attendees. My name is Howard Greenberg, President of the American Blockchain and Cryptocurrency Association here in Washington, D.C. The ABCA is honored to be part of CC Global's 2021 Asian NFT and DeFi Conference, and I am thrilled to address the many attendees participating in person and the many thousands more joining remotely from around the globe. Cryptocurrencies, digital assets, and decentralized finance collectively represent a once-in-a-generation wealth opportunity for billions of citizens around the globe. We at the ABCA are heartened to find groups such as CC Global working to raise awareness and connect investors, developers, and institutions in this exciting new world. Before I begin today, I would like to talk a bit about ABCA and our role in the current conversation. When we founded our US-based nonprofit in 2017, we recognized that there was a tremendous gap in understanding related to these new technology products. Bitcoin was still very much unknown in the North American market, and blockchain was a nascent technology. The regulatory environment was mired in uncertainty and blurred lines between different regulators. Concepts such as DeFi and NFTs were little more than ideas, yet to be fully realized as actual product offerings. We created the American Blockchain and Cryptocurrency Association to help bring together the individuals who are driving this new exciting world: miners, investors, academics, entrepreneurs, and corporations, to encourage dialogue, education, and innovation. While other groups have focused on lobbying, we have kept our focus on education and adoption. Through our partnerships with world-renowned educational institutions such as Oxford University, London School of Economics, Get Smarter, and the Blockchain Training Alliance, we have kept focus on connecting a broad community of stakeholders through outreach, engagement, education, research, and advocacy work. This is a goal I pursue even outside of ABCA, as the senior educator for cryptocurrency markets at Prosper Trading Academy, a market-leading educational service for traders and investors in many financial markets. There we help traders expand their trading skill sets on a daily basis. I am also very proud to be a member of the Blockchain Working Group at ATARC, which is the Advanced Technology Academic Research Center here in DC, working on a white paper for blockchain voting solutions for elections within the US. It is safe to assume we don't have to waste time on a basic question like, what is Bitcoin? But it is worth understanding why this asset class came into existence. First, remember, Bitcoin was born in the aftermath of the great financial crisis. This was a time when customers and investors started to lose trust of centralized financial authorities, especially the commercial and investment banks, who created a dizzying array of complex and ultimately dangerous financial products, like subprime mortgages and synthetic collateralized debt obligations. When these markets collapsed and the products collapsed, millions suffered globally. Secondly, in subsequent years, saw a further erosion of trust as banks often undertook riskier, even unlawful approaches to generate profits. Here in the United States, this was symbolized by bankers at one of the nation's largest banks who were found guilty of creating fake and unauthorized bank accounts, often without the consent of customers, all to generate phony profits. And lastly, there was and is a perception that banks were failing to innovate for their customers. As former Federal Reserve Chairman Paul Volcker once famously said, the most important financial innovation he had seen in the last 20 years was the ATM. Banks charged hefty fees, but the products they offered were still operating on a largely 40-year-old backbone created after World War II. It is slow and overly cumbersome. Even so-called fintech products like PayPal and Venmo still settle across those same central bank-driven overnight rails. The slow pace of innovation created opportunities for new players in the financial space, and enter Satoshi Nakamoto. Satoshi's dream was to leverage existing tech and a new configuration for recording transactions to enable the digital representation of value and use consensus game theory, public key cryptography, hashing algorithms, game theory, and peer-to-peer connectivity. These were all concepts that have been around for decades in some cases, but this innovation uses these existing technologies in new and exciting ways. The aim was to create a frictionless, disintermediated model to empower individuals to transact directly with one another on an immutable, transparent, and more real-time basis. The implications of this are almost too numerous to itemize beyond mere digital payments. And of course, new DeFi and NFT products hold the potential to revolutionize intellectual property laws, copyright and trademarks, and a host of other businesses by offering a bona fide method for presenting physical assets in a tradable, authentic digital form. They will have broad implications to the global economy. It can help bring an estimated 2 billion unbanked persons into the formal financial sector. It will help to unlock trillions of dollars in the underutilized assets across the globe. These technologies will play a role in revolutionizing so many different industries, from telemedicine to helping with the global renewable energy transition and also AI learnings. And there are even some visionaries who feel distributed ledgers will play a role in the future of human space exploration. Applications will expand at the speed of human imagination. But as this world awakens to these promises, there remains challenges against their widespread acceptance. First and foremost, the lack of clarity in global regulatory regimes is a pressing problem. Countries are moving at different paces with different goals when it comes to regulating these asset classes. Most recently, here in America, this uncertainty played out in the last minute and ultimately failed cryptocurrency negotiations as part of the bipartisan infrastructure bill in the United Senate. This failure illustrated that high-priced lobbying efforts can only bring a discussion so far, but many eyes were opened around the world to the power of the cryptoverse as thousands of calls flooded the offices here on Capitol Hill. Education is still the best method to creating common understanding, fostering adoption, and the hope is that increasing education in coming weeks and months will lead to better prospects as the topic of cryptocurrency regulation is revisited by regulators here in the US and around the world. Secondly, volatility among assets continues to remain a barrier to entry for many small investors. Wild price swings cause confusion and worry for all investors. Much volatility has been driven by my first point, the lack of clear regulation and reporting requirements. But a big part of the volatility is also due to my final risk, the danger of personality-driven advocacy and legacy corporations trying to stifle our industry at every step. Elon Musk, the late John McAfee, Mark Cuban, Warren Buffett, and Charlie Munger from Berkshire Hathaway. Whenever big personalities make pronouncements regarding winners and losers in the cryptocurrency space, we often see volatility spike. This makes ordinary investors fearful of these products, worried they are subject to market manipulation by the whims of wealthy special interests. Every day, there is more and more false narratives about our industry sparked by the legacy financial service companies that have too much to lose from disruption from these technologies. I see a future where the rails of the banking industry run on cryptocurrencies, with DeFi and NFTs being the back-end components that power financial innovation and inclusion and allow content creators to realize earning potentials. Again, this is something which greater regulatory clarity would go far to resolve in the interest of protecting small grassroots investors. I have tried to present a high-level view of where the cryptocurrency space stands as of now, and any of these topics could occupy a presentation of its own. But our hope is that this has given you a flavor of some challenges and opportunities in this amazing space. We hope these ideas will lead to some engaging and thoughtful discussion between the eminent speakers and guests who are presenting these next several days. I wish I was in Shanghai in person and look forward to meeting all of you at next year's event. And please reach out to us if we can be of any help to you or your organizations in the future. On behalf of the American Blockchain and Cryptocurrency Association, as well as Prosper Trading Academy, we hope you have found this helpful. And thank you again for including us in these vitally important discussions. Have a fantastic day and a wonderful event.